be frank!
Welcome to Let's Be Frank, the weekly podcast that gives a quick take on U.S. stocks from the perspective of a value investor. I'm Brian Frank, a professional investor with over 20 years' experience specializing in small and mid-cap value stocks. Every week, I'll cover what is working, what isn't working, and talk about the value we're finding on the hunting trail. Find out more at frankfunds.com. Now let's get to it. Today is Saturday, August 14th, 2026, and I am a day late but not a dollar short. Momentum continued to claw back gains from its July catastrophe, with the memory ETF ticker DRAM up over 13% this week. Thankfully, fundamentals also garnered respect, and stock price increases this week as we saw several increases from strong earnings reports. Before July, in the last run-up of momentum stocks, good earnings reports lacked follow-through on the value side. Even though you had good earnings, if your company was outside the hot areas, price gains were rare. So at least that is different this week and gives value investors something to hang on to while momentum investors try to reignite the party. Now, let's look at what worked in value. The fund I manage, the Frank Value Fund, has holdings in H&R Block, and boy, what a great week it was for that stock. It appreciated over 16% on a fantastic earnings report. Expectations were extremely low for H&R Block, with the dominant narrative of AI disrupting tax prep and causing the stock to trade below $30 a share earlier this year. My take on AI disruption is certainly cautious, but I have noticed that LLM companies do not want to process transactions or add liability like audits to their business models. Earlier this year, the online travel agencies all plummeted when OpenAI added vacation planning to ChatGPT. However, the company stopped short of processing hotel and airline transactions, as this is a complicated process involving thousands of businesses and humans. I saw this as a sign that artificial intelligence will be used to enhance experiences, but when it comes to transactions and liability, legacy companies have clear and value-added services. Fast forward to this week, where H&R Block reported another successful tax season, and with their business heavily geared towards full service rather than self-service like TurboTax, the human element is a feature of H&R Block's value proposition. That brings us to what didn't work in value. While my portfolio had a nice week, it still feels like we are running against the wind with momentum stocks regaining excitement. From SanDisk's Investor Day to online arguments why the July freakout was a fluke, it seems to me the top is still in for these companies, and eventually, favor will shift to value. Next up is on the hunting trail for value. The lion had a good meal this week as I found a compelling idea for a chunk of my client's capital. This time, we bought a spinoff company. If you don't know, a spinoff is when a publicly traded company owns a business or division that they want to separate from. Instead of selling the business, they create a separate publicly traded company and transfer ownership to their shareholders. Spinoffs are one of the few sustainable sources of alpha or outperformance in stocks. This is because often the holders of the large parent company do not have the mandate to hold a smaller company in a completely different business. For example, if you are an S&P 500 index fund and one of your holdings spins off a small cap division, you must sell the small cap spinoff even if it's a spectacular investment. I love these inefficiencies because they create value for my shareholders, and I think we found a compelling one this week. Wrapping up, momentum continued to bounce, and I still believe the high water mark was made in June. Value is demanding respect with good earnings reports, but it is still difficult to outperform momentum. Thankfully, I am able to add value by investing in inefficient areas like spinoffs while we wait for leadership to change. Thanks for listening, and have a nice weekend.
Performance data quoted represents past performance and does not guarantee future results. The investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be lower or higher than the performance data quoted. You may obtain performance data current to the most recent month end by calling the Frank Value Fund at 1-888-217-5426 or visiting our website at frankfunds.com. Returns include reinvestment of any dividends and capital gain distributions. Non-FDIC insured, may lose value, no bank guarantee. The fund's investment objectives, risks, charges, and expenses must be considered carefully before investing. The prospectus contains this and other important information about the fund, and it may be obtained by calling 1-888-217-5426. Please read it carefully before you invest or send money. This publication does not constitute an offer or solicitation of any transaction in any securities. Any recommendation contained herein may not be suitable for all investors. Information contained in this publication has been obtained from sources we believe to be reliable, but cannot be guaranteed. The information in this publication represents the opinions of the individual portfolio manager and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Also, please note that any discussion of the fund's holdings, the fund's performance, and the portfolio manager's views are as of the recording date and are subject to change without notice.